Tiana, and I run marketing at Tide. And I'm going to tell you a little bit more about how we're approaching marketing at Tide and how I've approached it in the past with kind of more established brands. Because I'm fairly new into the startup scene. I came from the dark side of the forest, which is Lloyd's. But I think there's some good lessons that hopefully I can share my experience with you. So I'm not going to sell Tide too much because I think Stephen did a great job already. But I'm going to do like a 1-minute pitch, which is basically you have no real reason to really love your current bank. You probably find it really unhelpful. It's probably a bit of pain to set up the account, and you really do not enjoy the financial admin you have to go through every month. So there's no downside to signing up to Tide. It takes 5 minutes. It's free to set up. So give it a go. See how we live up to your expectations, and let me know how you get on, actually. I'm keen to hear feedback. And that's my only sales pitch. And I'm going to move into talking about marketing and kind of how we've set it up at Tide and some kind of key pointers. And this is a really broad presentation. So, and actually, Charlie already touched on some of the things that I was going to touch on. So hopefully it'll be quicker and we can all go to the pub sooner. But yeah, just a bit of a summary. So first thing is product. There's no marketing plan that's going to save a mediocre product. So if you don't feel your product is there, just invest on it. Then it's about picking a goal, and Charlie talked a lot about this, the one metric that matters, and I'll tell you how that's going to impact on your marketing plan at a tactical level. Defining who you are, so this is about brand and kind of finding your voice. Find your customers, so media, where are they? Are people already searching for your product? Do you have to invest more in getting people to know about your product in the first place? And then executing, reviewing, and once you feel you cracked it, you then move on to a new goal. So starting with product, so I mentioned actually that it's so much easier to market a product that people naturally like and people naturally talk about. So I've kind of selected a few that I personally think are amazing at what they do. And I tried to kind of select a few of the less obvious ones, I suppose. So for example, DPD, like you wouldn't think this super boring product is a logistics company, and you wouldn't believe how many times I spoke to my friends and family about how I love DPD. So, there you go. You can make a really boring product become, mildly exciting and people talking about it. And it really, really, really does help with marketing. Then a lot of people talk about this as well, which is finding ways to build in acquisition into your product. And for example, Typeform, at the end of each survey, they have like a line that says build on Typeform. Boomerang with Instagram, and I think people have varying levels of success with this, if I'm honest, but I think the most successful programs are the ones that make it really tied to the product. So a good example is Dropbox. I think actually referrals were one of their biggest acquisition channels, and the way they've done it was that obviously once you've run out of storage in your Dropbox account, you had like a list of things that they suggested you do. So you could kind of share something on Facebook or on Instagram or invite 5 people, and that then unlocks things for free for you. So I think those are the good ones really, when you really tie it into your product. And I think other referral programs like Uber and Deliveroo are perhaps less successful because they're just about you kind of spamming your friends, and I don't think people really like that. I'm not going to go into too much of detail into this because Charlie covered it quite a lot, but it's really important to pick one goal and really stick to it and be true to it. And there's a really good book about it. You can read more. But I wanted to focus on how this kind of picking one goal will significantly change your marketing plan, and how important it is to focus on one thing, because otherwise you'll have a kind of schizophrenic marketing plan really. So at Tide, we're just starting really. So we launched our marketing at the last week of January. We've launched a few channels. Hopefully you've seen us in Old Street. We had a pop-up shop. We've done a bit of tube ads, we've done Facebook, but really the key goal for us right now is to learn. It's more important for us to learn than to acquire customers, and it's more important to learn than to acquire those really high-value customers that are going to be profitable. So what that means for the way we structure the marketing plan is that we don't have huge budgets, and we go for breadth instead of depth of channel knowledge. So we go and invest on a variety of different channels and set up small tests to prove things. And it means that even when you do find, one of those special channels that really work for you and that are really efficient, you have to keep in mind that your goal is to learn, and hence you prioritize investment into running different tests and even within the channel or launching new channels. So the way a learning plan works is a lot of testing, a lot of channels, and not a lot of deep optimization, really. Which is completely different, really, to what I was doing before. So before, I was at Lloyd's, it's a really established brand. We were launching a product across their 3 retail brands, established channels, established teams. There were a lot of learnings we could leverage from other areas of the business, and hence, there were big budgets, and the main goal was to acquire a lot of customers at a given price, really, and to really track that really well. So what that means for your marketing plan is that from day one, you have really high budgets on a variety of channels that you already know work, and then you have experts optimizing those channels a lot. So a lot of optimization and a lot of tracking. Before I was at Lloyd's, I was at Experian, and it was a completely different marketing plan again, because the main thing and the main metric there was around lifetime value. So it was a really mature acquisition team. Acquisition was really important. We had a kind of a super big acquisition machine, start channels that really worked. We had a huge PPC account. We knew exactly how much to bid for. But really there it was about a much more complex marketing plan where you had different levers that you could pull around churn mainly, really. Because as a membership product, you're about kind of acquiring quality customers that are not going to churn and really unlocking value in the product throughout the membership so that they feel they justify the membership, basically. So very different marketing plan. And you need a lot of data, and it's a much more complex marketing plan than what I had at Lloyd's, which was about acquisition. And then I thought it would be remiss of me not to talk about brand and some of the softer stuff, because I know all of this sounds obvious, but I think a lot of people actually get it wrong. And in kind of talking to founders and people running startups, I actually feel that when you ask them why do they exist, those big questions, like when do people need your product, and they end up giving quite functional descriptions of their brand and the great features that they're building, which are really great. But I think they fail to be a bit more ambitious into thinking that really if you're successful, your brand will stay with you for a long time, and hence it needs to contain a really, really big vision, and that's what you need to aim for in terms of your language and your tone and your visual style. So, and it means that you have great features, that's great, but those are just reasons for people to believe in your big, big vision. And one important thing actually is to be consistent, because when you're starting, you don't have a lot of money, so you have limited interactions with your customers, and hence every opportunity you need your brand to be reinforced and your vision to be kind of consistent. So everything communicates what your vision is. So from your font to the color scheme to your website, or if you have a kind of people talking to customers, who you recruit, how they're dressed. And that's really important, because even for Tide, actually, this is something that we're actually, is a big area of focus for us, because what happens in startups is that you release channels in different stages of your development, and it ends up being that, for example, at Tide, our identity evolved a little bit, and now, we kind of have a mismatch between, what our website is and what our social channels are, and hence it's a big area of focus, and I think we should take the opportunity to review brand and to ensure it's consistent. And then finally, we go into the more media side of things, and kind of touching on someone that asked the question around, how do I manage my marketing if people are not actively searching for me? How do I balance that? And you have to think about, where would people find you? When do they need your product? And particularly important to think about frequency, right? So how long will it take for people to make a decision about choosing you over your competitor? Because again, that's going to dictate, how many times you're going to have to be in front of them, and which channels you're going to use, and how much it's going to cost. And whenever you're building a media plan, you really need to think about each of the channels that you're going to activate, and judge them for the role that they play. And this is when most marketeers use that funnel image to show, where people are in the purchase funnel. But I always like to use this football analogy, which is, a lot of the times I see really kind of almost score-heavy plans, where people are like investing a lot in PPC and retargeting, but then they don't have a healthy pipeline of customers to convert in the first place, and people passing the ball to score the goal, really. And conversely, I also see a lot of people with big defense marketing spend, so awareness spend, and not enough focus on actually converting and closing the deal. So a good marketing plan is a balanced plan, where you have your defense players, who are not necessarily going to be the ones that are going to score the goal, but they're going to start the play for you, and they're going to get people knowing about your product and knowing about you. So these are your traditional above-the-line channels, so print, PR, display, outdoor, etc. And then you move into consideration mode, which is, okay, more targeted channels. People already know about you. Now they're considering you amongst your competitors. And those are typically your direct mail, affiliates, email, etc. And they pass the ball further into your scores, which are actually the channels that are going to get you kind of performance. So I've highlighted paid search and retargeting, but really, I think that the important part of this is for you to really judge your channels right. So one example for Tide, we had a shop in O Street, which I mentioned, and a lot of people asked me, oh, was this successful? Did it work for you? Did you get a lot of signups? And it was super successful, and we did get a lot of signups, but we didn't do the shop to get signups. And if we wanted to get signups, really there are much better channels that would have been cheaper, more efficient, and would help us acquire a higher volume of customers. So when you judge if Old Street was successful or not, you don't do it with the lens of signups. You do it with the lens of brand and being closer to our customers and really having a physical presence and all of the extra things that we gain from it. But then if you're thinking, okay, these are too many channels, I don't have enough budget, or I don't have enough time to focus on all of these channels, then I think a good place to start is social media.